Vitale, Vitale Wealth Management here with the Gradient Investments Weekly Market Update as of December 15th, 2025. And hoping everyone's having a wonderful week. Let's get into the weekend review. Major U.S. equity indexes finished last week mixed. The NASDAQ led the downside, falling 1.61%. The S&P declined 0.61%, but the Dow Jones rose 1.1%. And small caps stocks also outperformed, with the Russell 2000 gaining 1.21% for the week. We've been watching small caps, hoping they're going to rebound. They've been laggards for a long time, and now we're starting to see them come up. Market performance reflected a clear divide, a weakness in technology shares weighted on growth-oriented indexes, while more value-oriented stocks moved higher, underscoring the ongoing market rotation. Now, silver also drew heightened attention as the metal surged to a record high of $65 per ounce. Silver is now about 115% up year to date, marking its strongest annual performance since the late 1970s. Upcoming economic releases, key economic releases this week include insights into the labor market, of the health of the U.S. consumer, and inflation. Yesterday, the 16th, the November jobs report provided insight into the labor market, and on Thursday, tomorrow, the Consumer Price Index, the CPI, will offer readings on inflation, and on Friday, the Consumer Sentiment Report will show insight into the health of the U.S. consumer. Now, delayed report with some data missing due to the recent shutdown. Of course, that's always been delayed, but we see so many revisions, who knows what they are, but we're starting to get better results, so that's good. Let's talk about the market outlook. The Federal Reserve did cut interest rates by a quarter point for the third consecutive meeting last week. During the post-meeting press conference, Chair Powell highlighted growing disagreement among Fed officials, with two members favoring no change in rates and another voting for a larger cut. This divergence underscores the increased uncertainty surrounding the Fed's policy path in 2026. Now, as of Friday, markets were pricing in roughly a 70% probability that the Fed will cut interest rates by at least 2 additional quarter percentage points in 2026, according to the CME FedWatch. Investors' attention now turns to the delayed November jobs report, scheduled for release on Tuesday. Now, published 11 days later than usual due to the recent shutdown, the report will be an important gauge of labor market conditions and the potential path of the Fed going forward. Notably, this will be the first jobs report released since the delayed September report, as the October report was not published due to the shutdown. There were no changes also to the Gradient Investments last week. So, of course, they rebalance the portfolios all the time. But also in the jobs data, we are seeing the unemployment rate did tick up a little bit as a result. We are seeing a softening employment right now. So let's talk about stocks in the news. Costco, which is owned in the Core Select. This retailer beat earnings and revenue expectations with a year-over-year sales growth of 8.2%. Company mentions its e-commerce as a standout, with digital sales rising 20.5% year over year. It was also able to attract new members as U.S. consumers across income cohorts look for value and discounts. Despite the strong results, the stock declined 0.34% for the week. How about Broadcom, which is owned in the G50 and Core Select? The custom chip company reported better than expected earnings, driven by 74% in AI-related chip sales. Despite the strong fundamentals, shares fell 10.26% for the week, pressured by a broader sell-off across AI-related stocks. You're going to see a lot of ups and downs. You're seeing a lot of earnings, a lot of good positivity, but you are seeing ups and downs in the market. We're going to see a lot of volatility, and I think it's going to continue. We are still calling for a good year next year. I think it's going to be good, but we'll kind of see how we go. And as long as we're properly allocated and we've got safe money and growth money, that's the best way. Every time we try to time the market, we're in too early, in too late, out too early, out. It's no good. So that's it. Thank you for so much for being part of the Vitale Wealth family. We hope you're enjoying this freezing weather, but it's getting better this week, which is nice. So we're enjoying a little bit warmer climate this week. If you need to get a hold of us, give us a call at 855-756-5700 or visit us at vitalewealth.com. Hopefully we're going to see you again next week right before Christmas, and hope everything's going well for you. God bless you. We'll see you again next week.